The Australian dollar dropped sharply in the Asian session today on reports of weaker than expected job data. The job market contracted by 5,500 in December compared to expectations of 4,500 growth. The data series has been rather volatile, with a pattern to oscillate from month to month between upbeat and downbeat. But even though November's upbeat data was revised further up from 13,900 to 17,100, the two-month combined total was disappointing due to December's contraction. The unemployment rate also rose to 5.4% as expected. Recently released forward-looking Australia and New Zealand job advertisements dropped for a 10th straight month in December, raising the concern that job markets will remain weak down under. And unemployment could actually surpass the Reserve Bank of Australia's projection of around 5.5% by mid-year and prompt further rate cuts from the central bank. Released overnight, the Fed Beige Book indicated that the economic activity has expanded since the last report. All 12 districts described that they attained either modest or moderate growth, while the job market was mostly unchanged. But hiring plans were more cautious for firms doing business in Europe or in the defense sector. Moreover, real estate sector and consumer spending showed improvement while the manufacturing sector remained mixed. It is noted also that New York and Philadelphia had rebounded from the immediate impact of Hurricane Sandy. The euro continues to consolidate against the dollar and yen for the moment. European Central Bank Executive Board member Asmussen said that a mild recession would be seen in the Eurozone this year, but as of today, there is no inflationary pressure. He pledged to act immediately if there are any signs of increased inflationary pressure. He noted that the ECB had taken a more prominent role in solving the debt crisis, but warned not to overstretch the ECB's mandate, as that would lead to a loss of credibility. Another executive board member Q said that the ECB has been successful in easing market tensions using standard and non-standard tools. And market reintegration will succeed only if it is supported by continued efforts by governments to bridge fiscal and competitiveness imbalances. And the underlying structural problems which relate to uncertainty about risk, whether in the form of counterparty, credit, liquidity or redenomination risk, need to be solved. In Japan, Prime Minister Abe said yesterday that the government will choose someone who can appreciate my basic policies to beat deflation, to succeed Shirakawa as Bank of Japan governor after his term ends in April. And he emphasized that it must be a person with firm determination and ability. An opposition party said that Abe shouldn't choose someone within the bank and there would be no change in thinking. Chief Cabinet Secretary Suga said that they can't pass the nomination through both chambers of Diet, without help from opposition, indicating that they would consider views of opposition parties. As noted before, yen would likely consolidate further ahead of next week's Bank of Japan meeting.